All right, so the next piece of the puzzle is invoice financing, okay? Now, the reason why I like the invoice financing option is because it really tailors itself to a specific type of business, all right? Now, let's say you have a really good product, okay? And you work out a deal with Walmart or Target or even, another company. When you set that up, sometimes what happens is they'll give you what they call a purchase order. All right. And in that process, when you get the purchase order, they may say you need to supply us with, 100 of your particular product or 500 of your particular product or service, whatever it may be. Now, when you do that, it's an upfront cost for you to give that to them because you have to, produce, make all that stuff. So let's say if you were doing, I don't know, whether it be like let's say if you made fish tanks, you'd have to get all your fish tanks ready to go, okay, and make sure everything's done. They look the way they're supposed to be, have all the different pieces of the puzzle in terms of, everything that's needed for a fish tank to operate. And having all that done for 100 of them, that can be a very expensive project, okay? And so in that situation, you want to make sure that you have the option to have some financing, because if you have to do that, even though it's a great deal, you got Walmart to agree for this amount of money. The problem is a lot of times they may not pay you for, a month or so in that time frame. So what happens is you need to get financing, but the financing that you get needs to be based off the deal or the contract that you set up. Okay. So this is very good because it's not dependent upon your actual personal credit. Okay. Yes, your credit needs to be good, but you don't have to feel like you have to have the greatest credit in the world to get approved, because it's actually based off the credit of the person or the company that you're actually working with. So what does that look like? So let's say if you have 100,000 that you need to get, and that's what, let's say Walmart would have owed you. Well, because Walmart's strong, business credit, they're able to put you in a situation where you're able to get a lot of that right away. Because when we go to our banks and we say, hey, our client, they got a contract with Walmart, it's gonna be about 100K. They're not gonna receive that money until a month, 2 months, or whatever from now. In that situation, the bank will actually work directly with Walmart to make sure that they receive their payment back from them. However, they can give you the financing right away. So that way you can go do everything you need to do to have all the products ready, make sure you're able to put everything in the best situation. So as we go through this process of understanding how these different types of funding work, it's really important that you look at what works best for your business, because in reality, we can do all these at once simultaneously. Okay. And we'll go into that as we go through the podcast. Now, the other part of this is the requirements, kind of like, what do you need to have together? Obviously your business, ideally you'd want to have 2 years of experience in your business. They want to see a track record because they want to make sure that if they're giving you this amount of money, that you're going to do what you said you're going to do for Walmart. Okay. So that you're not going to waste time and not do good business, because the only way they don't get the payment back is if you basically mess up. Right. So in that situation, they're going to vet your business. So you want to make sure that you have all the necessary pieces, making sure your business is registered, ideally 2 years of history, active Secretary of State. So that way you can make sure that on their side, they can check and see your business is ready, active, and able to do business where you actually say you do business at. Okay. The other part of that process is making sure that you have the right type of vendors, because this is not going to work with everybody. Okay. So if you have a vendor that's really not that established, but they have a net 30 agreement or any type of agreement like that with you, where they're paying you after 30 days or after 60 days, it's not an ideal situation for you to even work with someone like that in that type of term. Ideally, you'd want to have all upfront terms. But if you also aren't established, sometimes it's hard to get that done. So that's why you want to kind of build that rapport, build the relationships with, and build your clientele, more importantly, with other types of clients that will pay you up front before you go to people that can't necessarily pay you up front, but will put you in front of a lot of different consumers that are ready to buy your product. Okay, so when we do this, we like to make sure that you as a business owner are in motion, making sure that you have the right brand and all those things, because even though a lot of times people don't go into this level of detail, but when you're an underwriter and you have to say yes to giving $100, $200, $300,000 or more to a particular business, you got to be able to explain why you did it. And it can't be, oh, I didn't check this or I didn't check that. They're not going to tolerate it. So always think from an underwriter's perspective, meaning that you don't want to have any holes, any weaknesses, especially things that you can control. You can control, making sure your business is set up right. You can control making sure your brand is set up right. Okay, so those things you don't want to make a mistake. But more importantly than the lender is the client. So you don't want to blow a deal with Walmart either, okay? Because that'll cost you way more than anything you could get from a bank. All right, so when it comes down to your process, making sure that you have all these back end pieces together, so that way when the banks see you as well as your larger clients see you, you can build that reputation. Why? Because when you keep this process up, now every deal that you would do with a Walmart or a Target or other types of companies like that, you'll be able to get funded a lot easier because the bank knows that you're going to do your job and you're also bringing the right type of vendor, so they know that they're going to get their money. And the more this process works, the larger the deals you can do. So now, instead of you being in a situation where you can't do a certain type of deal, now you're able to access it. So they consider the invoice financing similar to what they call factoring. I'll give you another example. Let's say if you got a government contract and the government contract was for $500,000, okay? And a lot of times when government contracting, a lot of newer sellers or whatever that may be, or contractors are able to access those larger amounts, surprisingly. But when you do that, you better make sure you can deliver, okay? So if you are the primary on a government contract, you're able to get access to a similar amount because the loan is basically backed by the government, which is the ultimate backer. Okay, so they know the bank knows the money's going to get there. They're already working with the government because they have a bank in the first place. So you know that they're going to make sure that everything goes smoothly. So the only way that becomes a problem is if you don't do your job. Okay, so they look at your actual history when it comes to doing all of your contracts. They do check and verify that on how you operate with not just with the particular contract that you have coming up or that you've already bid on and got approved for, but also previous contracts that you may have. So all of those things tie in to make sure that there's no weaknesses in your process. Okay, so you want to make sure that you do your best to facilitate and work with the best type of contractors or government, like I said before, so put you in a good situation. Now, the other part of that is on your end, you want to do everything you can to get not just the right types of vendors or whatever it may be, your contractors, but a contract that you know for a fact you can do. Okay, so you don't want to use this for deals that you're kind of 50-50 on being able to deliver. You want to make sure that you can do exactly what you said you can, because if you go through this whole process and you put everybody involved in this situation, you want to make sure that there's no chance of failure on your part or their part. Okay, so those are just some of the things that you need to understand when it comes to invoice financing as well as like government contract financing, because it kind of works the same way.